Let me start this video by saying I am not predicting that the stock market is going to collapse anytime soon. What I am doing is saying I'm looking for indication, signals, if you will, that the market might crash. I call it looking for a canary in the coal mine, and that is playback to coal miners used to take canaries in a cage into the coal mine, and when the gases got too high that could threaten their lives, the canary would die before they would. Once the canary fell off his perch, the miners were notified or alerted, and they left the mines. So what I'm looking for, the market is treating me extremely well, but I have to play defense. I have to look at the market and say, what might happen that could cause it to crash, so that I can make an informed decision. Do I get out and then buy back in at a lower price, or do I stay in because I don't think it's going to be that bad? So I got an email from a gentleman from Germany who's a part of the tribe, and as part of our tribe, if this is your first time here, we work together to notify each other. Right now we have about 35,000 subscribers and 35,000 members of the tribe. So if they find something, they send it to me. And we collectively then share information so that we can stay ahead of the market. And he sent me an article, and the title of it is Pandemic Triggers a Wave of Billion-Dollar U.S. Bankruptcies. Now, I want to emphasize, these are billion-dollar bankruptcies. These are large corporations. These aren't small corporations that just had a bad business plan. These are major corporations such as Hertz and J.C. Penney's and Neiman Marcus, who are filing bankruptcy because they have accumulated so much debt over the prior years, not just during the pandemic, but because of the pandemic, they can't pay that debt. Can't pay the interest and the payments that they had agreed to. So they're filing bankruptcy. They enter into what is called Chapter 11 bankruptcy. In Chapter 11 bankruptcy, the court basically says that you can reorganize and hopefully come to an agreement with your creditors and move on through business. Sometimes that works out, sometimes it doesn't. But for the most part, what it means is the creditors don't get 100% of what they had expected to get. If it gets bad enough, it rolls over and it trickles down and it starts jeopardizing the banking system. Now, in this article, it says as of April the 17th, 45 billion-dollar companies in the United States have sought refuge under Chapter 11. This compares to 18 in a comparable period of time of last year. Those who are familiar with this sort of thing basically say we're in the first inning. We're in the first inning of this game of bankruptcies, and to expect many more in the future. This happens even while billions of dollars have been pumped in to our economy just to avoid this very thing. So that gives you some relevance as to how severe it is. If we dig deeper, we're talking about there was what, 45? If we bring that down to $50 million companies, now we're talking about 157 companies that are at least of value of 50 million. If we then add to this situation that the $600 per week from the federal government for unemployment insurance is no longer going to be there, at least we aren't aware of it yet. There hasn't been a decision in Washington made yet. If that $600 now is no longer flowing into the economy, we're going to go deeper. And more than likely, the 45 on the billion-dollar companies will grow larger as well. A big part of this filing of bankruptcies is within the oil industry. 33 oil companies have filed for bankruptcy as a result of not only the the crisis, but also the fact that there was a dispute or a disagreement between Saudi Arabia and Russia, which was a double whammy on the oil companies. The other major sector is that of retail. 24 have filed for bankruptcy. That's a threefold jump from 2019 figures. So, and that's understandable that the retailers were shut down. No one was allowed in. And at the same time, companies like Amazon and online companies benefited tremendously. So we have a division of the survivors and the non-survivors. And it is in many cases driven by who has the brick and mortar and who has the online business. The COVID-19 virus has changed the way we live. We don't go out to restaurants as often. We don't go retail shopping. We do more shopping online. And therefore, these companies that have not adapted to technology are going to fail. And that's the threat to the stock market. As the failures become more and more, the possibility of that ripple effect that eventually reaches the banks is where the real canary lies. The Bureau of Economic Analysis says that the U.S. economy has actually shrank 32.9% in the second quarter. So we know now that there are billion-dollar companies bankrupt, there's $500 million companies bankrupting, and that's all relative to debt. We know that there may not be another relief check before a vaccine is introduced. We know from that a lot of people are not going to be able to pay their mortgage payments and are not going to be able to pay their car loans, so they'll have the pickup trucks and the cars will be repossessed. Students aren't going to be able to pay their student loans, particularly if it's added that they can't go back to college anyway. And so this credit crunch is going to come. And where it's going to be felt is where is that money going? So it's in what we call, or what they call, collateralized debt obligations. So this is what a collateralized debt obligation might look like. Let's assume that the orange pegs here are corporate debt, and the blue pegs are consumer debt, which would be credit cards, student loans, and car loans, and things of that nature. And the yellow are mortgages. Okay, we know that some of these loans from the corporations, $45 billion companies, are not being paid. So that loan in this collateralized debt obligation is no longer generating payments. So the issuer of the loan, whether it's a bank or it's a hedge fund or whatever, is unable to pay that portion of the loan to whoever they sold the loan to. So as we remove more and more of these pegs, sometimes mortgage payments aren't made, this whole structure starts to get uneasy and unbalanced. And eventually, the structure will collapse. And when it does collapse, that means that the investors don't get paid. And when they don't get paid, there is a potential of a run on the banks. There is a run on the financial institutions. The easiest way to understand this, and the best teller of how this happens, is to go back and look at what happened in 2008. And it's documented in this book, The Big Short. And if you want an easier way to understand it, there's a movie. It's called The Big Short as well, and it's currently on Netflix. At the end of this video, I'm going to give you a link to another video I made, which features the information on The Big Short and can guide you even further, and you can see what is happening. So with the information that our tribe member from Germany sent us, that there is this run on bankruptcies and billion-dollar companies, is it time to sell? No, it is not time to sell. The canary has not fallen off its perch. What you need to know is, what do you watch? What are you looking for? We know that the bankruptcies occurred. We know that the government has not authorized the issuance of another $3 trillion to pump into the economy to keep things open and keep things running. So what we want to watch is the alerts that say these debt instruments aren't being fulfilled. And that is going to come when you hear of banks, of hedge funds, of other financial institutions shutting down. You're also going to hear the pension funds of states, of teachers, of the federal government. Anybody who has a pension fund is the recipient of the interest that these collateralized debt instruments should have been paying. So when you hear them saying, Steve Mnuchin, we need relief here in the States to make payments to our retirees from our state pension plan or a federal pension plan or the railroad union or whatever, the teachers union, that's you when you want to hear what Steve says. If Steve says you're on your own, get out of the market. If you see mutual funds that also hold these instruments, they're going to be bond funds that you might buy or ETFs that you might buy, and the issuer of those mutual funds notifies you that they're going to have to reduce the interest that they had prior committed to you, you need to consider getting out of the market. These are the canaries starting to fall off the perch. So that's kind of what it's going to look like if it happens. Do I believe it's going to happen this week? No, I don't. Do I believe it might happen next month? No, I don't. When I think it might happen is if we do not get a relief package before the election. If we do not get a relief package before the election, that basically says we've given up. We're not going to go out and make the population whole, make them feel good. They're on their own. And that's what happened in 2008. That's what you'll learn in The Big Short. That's what happened to Lehman Brothers. The government said, you're on your own. They asked other financial institutions to help them. They said, we're in no position to help them. We have our own problems. So that's what you got to be watching for. Beyond that, will the companies that I own, the Big Six plus Tesla and a few others, will they survive this even if it does happen? Yes, they will, because they have strong balance sheets. They have a lot of money in their coffers. And as these bankruptcies occur, they're going to come in and feed off the wounded. They're going to sort through the clothing rack and say, well, this company looks like it might fit into our situation, and we can make it profitable again. We can get rid of the bad management. We can get rid of the debt that it brought into the situation, and we can make it whole again. So I'm a holder of the Big Six plus Tesla. I think you should be too, but I think if the opportunity presents itself, if I look at it and say, wow, I think this could bring Amazon's price down by 20%, I'm a seller. I'm a seller, and I'm waiting for it to come down, and I'm buying it on sale. That's what I'm looking for. But I'm going, until that happens, I'm playing defense. I'm watching the canaries, and if they start to wiggle on their perch, I'm going to tell you. So if you want more of this kind of information, and if you want to get our free morning market plan, where I share with you things like this on a daily basis, sign up here at bestofusinvestors.com. Cost you nothing. You become a part of the tribe. you start sharing the knowledge of what eventually is going to be 1 million people.